Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for showing up for another episode of Zen and the Art of Real Estate Investing, and we're going deep on short-term rentals again with the Airbnb Data Guy. That's John Bianchi, and we're going to be talking about the blueprint to high-performing short-term rental properties because that's what they do at STR Search. Let's get to John. This is episode 219 of Zen and the Art of Real Estate Investing with my guest, John Bianchi. John is the founder of STR Search, where they match clients with the highest cash flowing short-term properties. He's also the creator of Valuation and the Air Optimization Systems, which goes to his nickname and his Instagram tag as the Airbnb Data Guy. John, welcome to the show.
Thanks for having me. I appreciate it.
Yeah, I've been wanting to get you on for a long time because I've been following you. And I always found from the first time that I followed you that you were really truly data focused. How did you become the Airbnb Data Guy? Where did it start?
Yeah, so good question. I've had quite a few people ask me that question. And so I've had to think about it a lot. And obviously I self-proclaimed myself, right? They tell you, give yourself a handle. And I'm like, This one gets what I'm going for. But I always try to think what actually sparked it. And it was, would have been 24. I wanted to build an Airbnb business and I knew I needed to raise money because at the time I was just going to be doing arbitrage and I didn't even have enough money to do arbitrage. So I was like, if I'm going to do this and I want to get however many units, I'm like, I need to raise money. And I knew that if I could show that it was going to be a good investment, that it would be a lot easier to raise money naturally. And if you have data to be able to back up the revenue estimates, then you're even better. And then the better you understand the data, the more confidence that the investor is going to feel. And so then therefore, get really good at understanding the data, raising money will become easier.
Yeah. Yeah. Well, I think it's important, though. You said that you have to be able to really interpret the data, too, because you can generate it. That's an easier thing. Programs can generate it, but unless you know what it means, you can't really explain it to investors. And also for you guys now to clients, they're just like, oh, it looks good on paper, but you have to know kind of operationally, is it going to make sense also?
Yeah. And the programs that generate the revenue estimates, I hate all of them across the board. I don't feel confident with any of them whatsoever. Yeah. And if I'm an investor, so if you're going to raise money, you got to think of the person that you're talking to. And if I'm that person sitting there and I have somebody saying they want $250,000 for this investment and they can't even explain to me how this property is going to make these numbers properly with backed up proof, or if you question them on the data, then you're not going to be able to do it, right? And if you're not raising money today, you probably will one day because you're going to run out of your own money. So being able to do that is going to be a needed skill at one point, I guess, is the way to think about it.
And don't you think with the widespread data availability, that also made it easier for inexperienced operators to hop into the game, but also to hop in without really having an idea what they're doing because they look, they made 80,000 last year. Right. But they were good managers. They understand how to operationalize it and you can't just take that over.
I can't stress how much that annoys me but maybe not doesn't annoy me, but I feel bad for those people because they think they're doing the right thing, right? They're looking at this trusted data provider that's spitting out some number and they're going, well, why would this be lying to me, right? This is the best of the best. And so they then take that as gospel and truth and they go and live and breathe by it. But what they don't realize is that there's a ton of errors in that, or maybe it's right, maybe it's wrong. You don't know for a fact unless you can verify it. And then people go and take action on that stuff. And that's how a lot of people have lost money is because they don't really know what they're looking at, but they trust it fully and then they make the mistake. So
Yeah, and I found that even, lenders now doing DSCR for short term, they're just using blind data. They don't even know what it is, so they'll say, "Oh, well, they only say this is going to make 46 because that's what it says on AirDNA." And I'm like, it's not even close. Like for a good operator, it's like 80, like without blinking. What do you think about that? I mean, that's another part of this formula that we're talking about that is really like error prone.
So funny you bring this up because I've been thinking about this. I love your 2 cents. I came out with air valuation specifically because of that problem, which is essentially just a revenue forecast. Like, let me do my process to predict what the revenue could potentially be based off of your budget and your experience, right? But yeah, the main person that I wanted to buy the air valuations or use them was going to be the underwriters for loans. I was like, if I could create a better process altogether, then if they were to just type into, the rentalizer, then they could have way more confidence in all these loans that they're getting. And then they wouldn't screw up. Like, it would be a better investment for them, right? And that never took off whatsoever, like, because they just don't care, right? And I think one person told me that they don't care because nobody's defaulting on the loans, or at least they're not defaulting at a rate where they need to fix the problem. So the loans are working, right?
But those are the only the loans that they take. A lot of loans aren't given, and then properties aren't taken because the valuation comes back poor when it's not.
Right. Yes, exactly. And I mean, I've been working with TechVestor for 3 years now. I can't tell you the amount of times that that's happened, or we've had to put more down because of that. And
exactly.
We have so much data on the properties that we're looking at it. And we're like, we're going to double what this is saying, but they can't do anything about it. And so I was trying to figure out, like, how do I solve that problem, right? Essentially, it's hard to break into. But my thought is, I wonder if there's a way where I could almost open my own loan company where we do all of the vetting and analysis on our end because we understand how to do it.
Just for STR.
Just for STRs. Yeah. I don't know if there's any money to be made there, but if there was, I know that we could figure out who to give money to and who not to. And not just based off of, their what was that thing called? The if you can lend money to somebody, if you have an 800 score, credit score.
Oh, yeah.
Not just a credit score, right?
Yeah.
And what it says. So anyways, I've been thinking about that. I don't really know exactly how those companies work, but
it makes a lot of sense to me because you said a really important point. You had them kicked back, and I've had a couple that I was looking at where it was like they came back with the AirDNA data and it was too low. So we either had to bring more, or then they wanted the long-term rent prospects. So then I'm verifying on a long-term rent prospect, which means I'm going to have to bring more to the table, and I know I can make more, so I basically have to prove it later.
So with that being the case, my thought is that if my loan was 1% higher, but you could, put 5 to 10% down less, you'd probably move forward with it. And so I could charge a higher interest rate to be able to provide the loans for the ones that aren't getting provided by the bigger companies. And then that would give me like a bit of a spread to make it more worth it. But anyways, that's a completely different idea altogether.
Yeah, I like it though. But it is a big glut for the industry because we're talking about the people who are flying in blind, taking the loan and then being like, hey, this wasn't correct. It's like, well, you're part of the formula. It's not an absolute formula that it works.
Right. I could almost guarantee you that I would probably deny 90% of them. I'd just be like, no, it's obviously not going to work. You don't realize it is what it is. But for those handful that you would take on, it would be a no-brainer because like you can clearly see, this guy has experience, or even if they don't, the property is going to crush it based on the budget that they have and they have some general knowledge. You're almost like vetting the person's ability to execute in comparison to just what are the other properties doing, right? So
anyway, and balancing out all the high doc loans, of traditional conventional mortgages, because it's not based on that. It's based on whether the property can form. And from your point of view in this fictional company that we're in right now, it's can the operator be part of the performance to work, or are they partnered with a skilled operator? So okay, their co-host has done 50. That's solid.
What would be a super interesting piece of data is how many people who get DSCR loans sell the home within 2 to 3 years.
Yeah.
I would be super curious about that because I guarantee you it's way higher than most people think.
Yeah. Yeah. And I think that in the last few years, it's probably, just as high as ever, just because people thought, they look at it as a business, which it is a business. But if they've never run a hospitality business and then they look at it, as we're saying, you can't just walk in and perform the way somebody else did because they're a much better operator. They had 800 stays and you have 0. Well, I took all the stuff in their house, so I have all the stuff. yeah, just wait. You don't have the automation set up. You don't know what you're doing. Do you think that the whole Airbnb bust, I'm sure you got tons of questions this over the years, was that really a product of just too many inexperienced operators getting into the field that kind of made it look like it wasn't a good investment?
Yes, with nuances, right? So like, I think that's actually a really good way to explain it, where Airbnb bust was essentially a good headline.
Yeah, of course.
Right.
News.
So you get new. Worst case scenario is always if it bleeds, it leads. Right. So
yeah.
I have been so annoyed by the Airbnb bust,
It's ridiculous.
and at the same time loving it because it stopped so many people from getting into the industry. Right. So it's like, cool. Yeah. Let the people who know what they're doing do it and get all the other people out. But yeah, I would say the reason why Airbnb bust was popularized was because people were still acting like it was 2020 or 2021, buying properties in fad markets. So markets that were going away. They were only popular. They had an over demand due to COVID.
Yeah.
Once everything went back to normal and people were okay to go in cities, then the travel spread out, right? And so then all of a sudden there's not as much demand in these markets. Then you get the people who bought in 2023 where the home prices had almost doubled, the interest rates had almost tripled, and their covering costs were significantly higher. And then the travel demand drops. And then you have this oversupply, over expensive properties, too big loans, and then you're making no money. And then you start blabbing about how Airbnb is a lie and everyone online is a liar, right? And it's like, well, it's obviously not true, but in your scenario, it is true, right?
Yeah, so no, I think it's interesting because it's as if like after 2020, now everyone, found out about this, but I grew up staying in short-term rentals, when I was a kid, and I'm old. So it's like, this isn't new. Nope. It's just that there's technology that makes it look flashier and happens. But, I was doing short-term rentals before Airbnb when it was just HomeAway and Vrbo, and the sites were okay. But it wasn't, you didn't have to do as much. It was kind of easier in some ways and a little bit harder back then. Mm-hmm. But how did you get so interested in short-term rentals? Like what led to that interest?
So I used to be a financial advisor. I built up that business over 3 years and just hated it. Like I was set. I could have just kept doing what I was doing. When you're building up a financial advising business, you build it up client by client. And eventually you get to a point where like you're okay. Right. And then you can just keep making it better. But I was okay and I hated it. And so then I started to think like, how can I do something different? What else is out there? And I just started testing everything and anything, reading different articles about all these different businesses. And then I had an apartment with my brother. My brother moved out. I had an extra room and I was just like, I was going to try this Airbnb thing. And so then I did it and I rented out the room for like 6 months and it was covering my rent. And I thought that was the coolest thing. You know what I mean? I'm like, how cool is this? Right. It's just so funny to think back like, oh my God, I made $700. Like how crazy is that? And then 1 month I made like 1,100. So I actually like profited a couple of bucks there. So it was that really was what intrigued me. And then I went down the rabbit hole of articles and YouTube. And then I ran into AirDNA. And that's what really got me to keep going. And I remember specifically, it was this one guy who had either I read an article or something. And I found out about this guy's business over in Yosemite, and the properties were making about $100,000 at the time, and he had 60 of them. And so I did the math, and I was like, "Holy crap!" I was like, you can make that much on Airbnb, and it like blew my mind that you could get more than one and all this kind of stuff. And then I just kept going. I kept putting together a business plan, how to work, how to do this, how to do that, how are people doing this. And I just kept trying to figure it out as I'd go.
Yeah, but interesting that you bring up the guy from Yosemite, because right when you said it, then I started to think of what used to be Getaway House and now Postcard Cabins, which was just bought by Marriott. And that's the first big major STR acquisition that I know of by a hospital chain. So what do you think about that in terms of the STR game? It kind of gives startup people even more of an option to say, hey, if I really build this like a business, we could sell it out to some hotel chain, or maybe it becomes the things that the hedge funds want because it gets to that high income level that makes sense for them.
It's a good question. I'm thinking about a couple of different things, so I'm trying to think of how to answer. So obviously I work with TechVestor and have been for 3 years, and they're the largest short-term rental investment fund, right? So if anyone is like primed and working to do this, it's TechVestor. There's stuff I can't talk about, so let's just say I think that there's a huge opportunity for that specifically. It's one of those things where people have been theorizing, saying like, hey, if we did this right, then these really big guys should go for it, right? And the reality is that, yeah, duh, right? Like once if you build it up to a certain size, like that exists, those people out there exist, they want these things. So Marriott doesn't want to go home by home by home by home, nor should they, because they have the money to be able to buy it and carry the cost for however long till it becomes profitable and then build significantly bigger on that. They want the infrastructure, right?
Yeah.
They want all those people in the team to be built out already so they can build on top of that. So to me, it's one of these things where it was inevitable if you're following the industry. If you understand the industry really well, it's like, yeah, that's eventually going to happen. Okay. But who's going to make it happen? How are they going to make it happen? What do you need to do to get to that point? And so I just think there's I find it interesting. I'm also not surprised. I love seeing it. I'm curious what's going to happen next. I wonder where things are going. I think it should give people hope. I think there's also going to be people who start to, maybe I don't want to say this. This doesn't make any sense. Now that I think about it, I was going to say people starting to consolidate other people's portfolioos to bring them together to sell up. But that would that's easy to do with property management contracts.
Yeah.
Just a contract. But in compare when you're actually buying, 10 homes from somebody else, that's a whole other scenario altogether.
Yeah, operationally it is harder. It was really interesting though to watch, again, what started as Getaway House, because I just remember when it was just a couple in the Catskills or something. And then slowly I would just be like, I think there's more. And then really like a month ago, before I heard the news of the Marriott purchase, I was like, let me go see. I want to go stay in one of these. And I looked and I was like, there's like 60 at each location. I was like, that's why the Yosemite guy, made me think of it. I was like, wow. Okay. So then right away, after that, I heard the news and I was like, interesting, because it's kind of the trajectory of self-storage went that way. People started buying it, fixing it, and then realized like, wait, if we really operationalize several units, hedge funds are going to buy it because it's a well-oiled machine.
Right. That's the part that's really intriguing to me more than anything. But the problem I would say is that you do have to get to a certain size before they even blink. That's why I said consolidating, because I'm thinking about it, like how many Airbnbs could I personally get with my own money over a 30-year period is not going to be that many. If I start to raise money from other people, I have to do it, in a certain way. If I start to crowd fund or bigger ways, I got to get the SEC involved, right? I think I said that right. And so it's like you're going into these next levels. But one thing I just thought of, I know I just went on a bit of a tangent. I didn't finish, but something that just piqued my interest is I bet you could reverse engineer the math on what Marriott sold to Getaway and at what multiple because let's say they sold at a multiple of like 4x, right? If you were going to then consolidate other portfolios together to try and do a similar thing, you could purchase them at 2x, right? So I could go to somebody who has 10 Airbnbs that are making, let's say, in profit, $500,000. And then which would be great if that was the case. And go, okay, I'll pay you, I'll pay the value of all the real estate plus $1 million on top of that. And now you've brought them together. And then if you can keep doing that, and then you can sell it at 4x, there would be a lot of, you'd double your money essentially for doing all the work of consolidating that. And then you would be able to raise the money to be able to do that with the intent of offloading them. But if you understand what the multiple is, then you can reverse engineer it to first be able to raise the money and then be able to start consolidating one by one to eventually get to that point.
Yeah. I think like with consolidation, the locational significance is important because how it worked for them is they had so many at one spot. So if it's just for an example, like if you take the Smokies where there's like, HOA developments where everybody's doing STR, I could see a group coming in and just buying all those from separate owners at some point because they just want to say, well, let me just take this whole HOA as an STR resort property. Now that seems a little bit locationally easier than acquiring like 10 from somebody who's doing really well operationally, but they're all over. Because your cleaning costs and stuff will be more because you can't, pack them together.
Yes, speaking from experience, extraordinarily difficult because you have a lot of different owners. And
I think that part would be the hardest part. I just kind of see it as like a pipe dream. And then you have like Aunt Mary there who's like, I'm never selling.
Or you start, the word gets around that you're trying to buy them all and everyone goes, all right, give me $100,000 more.
Yeah, exactly.
And then they keep going, right?
Yeah.
The way that we thought about doing it is you just build it. So you build the entire community altogether. You own the entire community.
Yeah.
And then you sell the entire community to somebody, right? So, but crazy amount of capital to get that going. And it's a whole different play, and there's a lot of issues. And then you have a lot of the exact same properties, and they're all in the same areas. And what's the revenue difference between them all? And it's just like, then you're competing with like all of your own properties, which means you got to be different than everybody else to be able to outperform. And there's definitely a way to do it to make it into like this really great community that could be just a specifically Airbnb community.
Yeah.
But you would want to do it very strategically so you didn't shoot yourself in the foot.
Yeah, I agree. I wanted to go back to your start. Did you start? So you started with the one that you own, but did you ever end up getting into arbitrage? Because I know you said originally that you were interested in that, and it's kind of like a hot button topic around it. Who should do it? Who's good at it?
Yeah. I've got a lot of thoughts on arbitrage. I did do it. A lot of bad thoughts.
Yeah.
You got to do it. It's a very specific scenario where arbitrage makes sense, in my opinion. Okay.
Yeah.
That other people have different opinions. We can get into that if we want. But yeah, I ended up getting 8 of them in Chicago, 2 of them down in Scottsdale, 2 over in Michigan. And then I had another 7 management contracts at Chicago. And then I also had a clean company. And so that was the portfolio that I had, which then COVID came around and got rid of it. So COVID came around and nobody was going to Chicago. Carrying costs were $30,000 a month. Had to get all of those properties rented out long term. Did that, and then I had a year before I could get them back because I did have the ability to get those get them back turned into Airbnbs, and I ended up selling off all the contracts instead, which at the time was seemed like the right decision. I kind of wish I didn't do it, but hindsight's 2020.
Yeah.
I wish I didn't sell to the person I sold to. I think it's a better way to think about it. But
Did you keep the ones in Scottsdale though? Because that got rid of all of them. Yeah, because that was probably doing better than Chicago, at least during the pandemic.
Yeah, they just made sense to get rid of all of them. So yeah.
Well, let's just go arbitrage for a little bit, because I occasionally rail on people, not because I think arbitrage is a bad strategy. It's just that I think it needs to be fully transparent, and it's not for everybody. And it's also not something where you can go, watch a TikTok video and just be, oh, cool, arbitrage. I'll just do arbitrage. I'm brand new. Why wouldn't somebody want to let me arbitrage their place? I mean, that's just the most ludicrous thought ever. An inexperienced arbitrage operator just burn the place down.
You know what's funny is I was that idiot.
But to be able to get them under, you were doing something right. You had the pitch perfected at some point. Our
first one we went, let's not tell them. We were like, we you know what I mean? We got to the point. I hate saying that because I feel so stupid now. You know what I mean? But at the time we were like, they agreed for us to do it, but we didn't mention Airbnb. And if we mentioned Airbnb, we might end up losing the contract. We just didn't want that to happen. It was in an apartment building downtown Detroit. We're like, let's just do it. So then we put it up. 1 month in, eviction note underneath the thing. We go, oh, that was stupid.
But that's exactly what that I think that really, really helps people. Your transparency helps them understand why the transparency of arbitrage is important. Because when you present it right and it's fully transparent, it's a great option for the owner. But you have to be experienced for them to know, hey, you're really going to caretake these places and watch after the guests. And then if you get 80 reviews, you're making this whole place better. It's great.
Right. Yeah. The pitch to the landlord should always be the way I always pitched it, to put an image in their mind, was I want to be like a Subway, right? So, when a Subway finds the right location and it's working, they're not leaving, which means the person that they're renting that from gets rent for the next 10, 20 years.
Yeah.
That's what I want to be able to do with your home. If I can make this work in your home, then I'm going to be the best possible tenant for you forever. And I'll take the home will be cleaned 3 times a week, and you know what I mean. And everything that needs to be fixed that's minor, I'm going to fix because I need to, right? And it's you're going to do nothing. You have a long-term tenant. It logically makes sense if you can set it up that way, but it has to actually work. I'm here's all my data to prove that it should work, right? Yeah, that's the pitch. But the other way of thinking about it is, should you do arbitrage or not? And I feel that's the piece on TikTok that everyone's yeah, it works all over the place and do this, do that. And they don't logically think through it in a more strategic way.
No, I think they think I don't have money, so I'll do arbitrage, which you thought too, but it's not that simple. Just like people who are I want to do sub 2 to buy houses. Great, but there's a huge risk in that. Right. They're just thinking reading a book, hey, how to buy real estate with low or no money down. Okay, that makes sense. But I've always said when it comes to that type of thing, the people who do creative finance deals aren't people with no money. They have money. That's why they have the leverage to do creative finance. And it's the
Right.
same with arbitrage.
Right.
If you're an experienced operator, you can get more and more arbitrage because they can look at you and like, oh, like you have 19 ones of your own. Like, yeah, let's do this. This is good as gold. I'm going to get paid my rent. You're going to, like you said, you're going to take extra care of it.
Yeah. The problem is, how do you get there? How do you get to the 19,
right?
Yeah. So I kind of have like standard advice on this because I've had so many people ask me this question. I've had to think through it, and I had my experience with arbitrage, which was kind of good, kind of bad. And I kind of think to myself, like, if I were to do it again, how would I do it? Right. Because, learn from my experience. I think that's the best way of going about it. Arbitrage is a way to be able to get experience a lot easier than buying a home or trying to get somebody to let you manage their home with zero experience, right?
Yeah,
so you got three options. You buy a home, you rent a home and re-rent it, which is the arbitrage, or you manage somebody else's Airbnb. If you don't have the money, you've only got the other two options, which is the arbitrage and the management. But if you don't have the experience, nobody's going to let you manage.
I saw this post on Bigger Pockets, and the guy was like incensed that he couldn't get anyone to let him co-manage the Airbnb for free. And I said, but you have no experience. How's that helpful? You don't take something for free to lose money. You don't know what you're doing.
Yeah, it's a loss to the owner. It's a loss to the owner. So then you have arbitrage, right? So then, okay, how could arbitrage help me here, right? If we think about it. And if you did have one arbitrage, even if it was one bedroom, a studio, the smallest possible place, you could learn all the systems to understand how to price properly, how to message the guests, how to get the place cleaned, and be able to have enough proof to go to somebody and be like, hey, I'm killing it over here. This is going well. We're doing blah. I could take you on and do the same thing. And now you have proof. And so the way that I think about arbitrage is, if you don't want to go all out on arbitrage, but you do want to build up a management company, what if you just got one arbitrage deal that was a smart one, like get a one bedroom that's actually going to make you some money, not just throw money to learn, and then try to get that and then use that as leverage or experience to be able to then get all of the management contracts, which are free, right? Management contract is free to get, and you can make money every single month. So that's one way of going about it. But then there's obviously the other people who are like trying to essentially build hotels. Like they have 400 plus one bedrooms across, 20 different cities. And that's, arbitrage works in that model from what I've seen for the most part. It's a lot, but it seems to work. I don't want to do it personally, but they do.
Me neither. Yeah, that sounds like it could be a house of cards at some point with that much on arbitrage, just like somebody who has like, as many mortgages as you can get. Like if you just, something tweaks in the market, you're in trouble. That's what I would be worried about.
I know that. So I've been thinking about that logic a lot, because you could scare yourself to do nothing forever if that's what you think, right? So there has to be some sort of balance, because I feel like I'm in that scenario where I always focus on this downside, because that's what I have to do with my clients is I have to go, what's the worst case scenario? Can we avoid it? How can we avoid it? Right. But then if I'm so hyper focused on this worst case scenario, I forget about the best case scenario. And then it stops you from taking action because you're so nervous. Right. And so I myself am even trying to like balance that logic. And obviously I went all out with arbitrage in one city for the most part, and it lost it all too. So like I always tell people, I feel like I'm somebody from the Great Depression who's pinching pennies, you know what I mean, forever, and always waiting for the next Great Depression. Yeah, that's how I feel when it comes to Airbnb, which is why I'm so conservative with everybody. It's kind of sucks sometimes for me, but it's great for the clients because I'm always looking at the downside.
Yeah, then when one is good, it's locked in. I mean, if it can kind of get through the gauntlet, it's going to crush, especially if you've helped them become a better operator or a first time operator.
And we're at 200 properties. Every single last one of them is cash flow positive. So every single one that's awesome. Live, right? So the conservativeness has definitely helped, but it is something that's always in the back of my mind.
Hey, it's Jonathan. I hope you're enjoying the John and Jonathan show with my guest, John Bianchi, as we're talking short-term rentals, but we're going super deep on data. If you want to use the services of John and his company and everything that they do, get on board at strsearch.com. When you make that call, you're going to do a one-on-one with John. You're going to tell him that you got there from his episode of Zen and the Art of Real Estate Investing. And I can tell you that I'm in discussions with them right now because I really like what they do. And I feel like their data is exceptional. And if I'm going to go back into short-term rentals, I want to do it right. Let's get back to John. I know my listeners want to know this because everyone is always talking markets. And I found that over time, short terms become a little bit more accessible in oddity markets also, just if there's, no hotels or things like that. So when people ask you about markets, is it really about how much they want to spend, what their risk tolerance is, or are other markers that you look at in terms of, obviously there's, the vacation markets, but, the same as midterm rentals popularized, they thought it was just going to be travel nurses. Now there's a whole bunch of different suitors for it. I found STRs, like people are doing them in a lot of places that I never expected.
Good question. How to answer this? So I've studied 350 markets, so I'm running a lot through my head. Right?
You are the Airbnb data guy.
Yeah, because it's. I don't like to give just a blanket statement. The question, if I can say it back to you to make sure I'm understanding it properly, is how do I help people determine which markets to go into and which ones to avoid?
Yeah.
Okay. So specifically, like I've tried to systemize this as much as possible because it allows me to help more people. And that's how I've done it, where I have studied the 350 markets. We have a handful that we know work really well.
Yeah.
And we know what works in those markets really well. But if you are an individual who's out there trying to find a market, right, then this would be my advice, right? Always start with regulations. Easy, done. You've got it. You figure it out. Regulations say you're allowed to do it as long as you follow their rules. Cool. Then you're good to go. If they say you can't do it, just walk away. If there are no regulations in place, you're taking a risk.
Yeah.
Simple as that, right? So then the next piece I go for is there decent demand in the market relative to the purchase price of the home? So can I find are there homes in this market that are roughly making $100,000? Let's say we'll just use that as an example.
Yeah.
I go, okay, I'll check AirDNA to see if that's the case. And then what I'll do is I'll go over to Zillow and I'll try to see, are there similar properties to the ones that are making $100,000 a year that I could buy for around $500,000? And this is what I call that 20% price to rent ratio. So $100,000 of revenue to a $500,000 purchase price, there's going to be cash flow in that property if that's what you're looking for, right? If cash flow is king to you, then if you can find that ratio, it is almost always going to work well for you. And so I always say to look at a market at a 10,000 foot view and try to just see that. If you don't see it, move on, right? If you do see it, dive deeper. And the reason you want to do that step first before diving deeper is because markets, to deep dive an entire market and truly understand it, takes a ridiculous amount of work. There's no point in understanding every single last thing about a market if there's no cash flow to be made. And if cash flow is your goal, then why are you studying that market for so long, right?
Yeah, that would be a failure of time. You would have used all your time to learn stuff about other markets, but you could have looked right away and said, hey, well, nothing is hitting that 20%. So why spend the time?
And all you have to do is, if you want to be quick about it, right? Like look up 5 to 10 properties that are within a certain range. Let's say again, 100,000 to 120,000. Then go and get understanding of what those properties look like, the bones, right? Like how big is the backyard? Do they all have pools? Do they all have second living rooms? Okay. Are they just like average homes with a garage? It's like, okay, cool. Does that blueprint exist on Zillow for around that $500,000, $600,000 price? Yeah. Okay, cool. Let's understand this market like the back of our hands so that we can then make a really, really great purchase in that market.
Yeah, and I found like I don't really use AirDNA much. I mean, I think it has validity, but like you said, there are errors in every type of thing that's going to generate. But I found that when I'm interested in a market, I just go on Airbnb and I look at all the homes and then I look at how much they're booked. Of course, I don't know the exact data, but as you're saying, I want to see, oh, okay, these 3 look like they're really booked up. That makes sense. This market wants something a little bit higher because it is really market specific. That's why you said, like, we know what works in these markets because that's really important. And that's another place where I think inexperienced investors fail. Like, what are the table stakes that you need for here? Is this a relaxed market or is this an amenities market? Because now like amenities have exploded, but if you're getting something in the middle of the Midwest, like you don't need a pickleball court. That's not what you need there, right? It's very interesting to see where people are going and if they're going to overdo it in the wrong market.
Yeah, agreed. So just to let you know, I actually find it crazy that you don't use AirDNA to like really dive in there and you're just using Airbnb. That is to me.
Oh no, I'm not saying I don't. Well,
Okay.
I'm just getting back into being interested in trying to do short term again. I don't have any now, so I would use it when I'm ready to go to really deep dive it. But I'm saying like for a novice, they don't need to immediately start off and get a subscription before they're ready, because you can at least figure out market wise, like you're saying, you're going to bounce it off as their 20%. Ooh, look, this is what's working. Because you can see when dumps are working, then like, okay, well now if I can get into that market, I can really increase it if I'm good operationally.
Yes. And it'd be a quick way to be able to look at the market and know if there's any demand at a minimum. And if people are getting booked out at one point, I can't stress it enough that please, at a minimum, get the bare minimum AirDNA subscription.
That's good advice.
Yeah, because like the bare minimum one will give you the annual revenue number of every Airbnb that exists in the world, right? And you may be looking, so like as you're saying that, scenarios are going through my head like crazy, right?
Good,
like,
good. Listeners are being saved.
Yeah. So you may look into a great example is I think it's Hot Springs, Arkansas. I think there's 5 to 10 of these properties in Hot Springs, Arkansas that are mega properties. Like they're so well done, they're so cool, they look great. And if you were to be doing your analysis, right, what you would realize is that like, wow, these guys are it seems like they're making a lot of money. Like their nightly rate is really high. They seem to be booked up quite a bit. Like they might be doing really well, right? And then if you then were to go look on AirDNA, you would realize like, oh yeah, they are doing really well. That's interesting, right? And when I say really well, I mean like 200,000 plus. Like that's crazy. But then if you were to scroll a little bit down, you would realize it goes from like 200 to 80,000 very quickly, right?
Right.
And so there's this, and so then you got to ask yourself, hey, do I think, one, that I could have enough money and knowledge to put together a property that's going to compete as well as those ones?
Am I a 200 or am I an 80?
And then the next question is, how many more of these homes could go in here and still make $200,000 a year before it starts going down to 180, 150, whatever, right? So that's why when you say that, it's like, oh, it looks like there's demand over there. It's like, yes, now let's go see what else we need to see.
That's a great point, though. And I think that shows, for inexperienced investors who want to get into STR, this is proof of what we were saying in the beginning. It's not easy. It's not buying something and just letting it sit. It's a hospitality operational business where, of course, you can hire people, but that's going to reduce your cash flow. And you were saying before, if you're looking to cash flow, but to me, I've always been an appreciation investor because I could be. The only reason to do STR is to cash flow because you now you have to buy the property so high that you can't really count on the appreciation. It's like, what would be another strategy if the cash flow is like not great on a short term, unless my scenario, which is I want to use it all the time. Also, that's where I think it works. If I can break even and use it 3 months a year, that's a win-win.
There's another scenario that is driving a lot of people into the short-term rentals, which is the short-term rental tax loophole.
Yeah. Ooh, great point. Yeah.
So that's the other scenario where high net worth individuals want to be able to save on their active income. They buy the property, they hit the qualifications, and they get to write off a good chunk of their taxes. And so to those people, they're looking at properties and going, I'm okay if it breaks even or loses money, which I kind of can like understand, right? Their goal is a ridiculous amount of these people. Their goal is just to find a property that breaks even.
Yeah.
And it in my opinion, it drives me nuts because you don't need to do that. And if your goal is,
you can find one that makes money.
Or I'm just going to say it, you can hire my company and we can find you one that makes money, right? Like you don't have to lose money. Yeah. And then on top of that, if your goal is to break even, I would give you an 80% chance that you're going to lose money, right?
Yeah,
like if that's what your objective is, like, hey, I'm just going to break even on this one. And it almost always doesn't work out, right?
Yeah, because it would be like striving to be average. Like
with little experience as well. So that's the
right.
other issue. They're accountants that they heard about this accountant on Instagram where about the short-term rental tax loophole. They
Yeah.
then worked with the accountant. They're like, okay, I'm going to go buy a short-term rental. Then they go and use the rentalizer, which is what we talked at the very beginning, where they're using these softwares to figure it out. They don't understand the data whatsoever. It's their own money, not raising somebody's money. And they're like, yeah, I'm going to buy this home it may have gone up, it doubled its price in the past year and a half, but I'll still buy it. And it's already got furniture in there, and I'm sure I'll be able to manage better than the last guy. There's no reason why they're selling it. And anyways, I see that scenario often, and it just, you don't need to do that. You can either find one that cash flows, they do exist, or hire me and I'll find you one that cash flows. Simple as that. You still get to save on the taxes, right?
Yeah. What are the most, when you are bringing on clients, what are the most important things from them that will help you match them to the best market and property for them?
What do I need to know about them?
Yeah, like what are the key things? Like, do you need to know, obviously, like what money is available, operational experience, things like that. What are the most important things that really make it so you can find them a spot and know like, hey, this is going to work. This is your property.
So when we first started working with retail investors, we had like almost 20 questions that we'd ask people. And then we realized that we really only needed to know two things: their budget and their preferences. Now, mind you, their preferences can be a bit, but how much capital do you have? One. Okay, that's going to either put you in, if you only have 150,000 to 200,000, there's only 3 markets that we have that are going to work for you out of our nearly 15, because those ones are the only ones that work at that budget. It's not a bad thing. Those are the markets where we've realized you can actually win with that budget, right? So that's actually kind of awesome. And so that's the first thing. Then the next thing is like, well, what do you care about? Because a lot of people, you'd be surprised how many people come on and they're like, I don't want to be in Florida. Don't put me in Florida. I don't care about Florida. And they go, well, okay, sounds good. You know what I mean? Like, no big deal. So we find them another place. And then there's other people who are like, I live in California. I don't want to have to fly to the East Coast to go see this property. What do you got in between? Right? And we go, okay, well, this is what we have. In other words, I don't want a 6-hour flight. I want a 2-hour flight. We go, okay, well, we could see what we can do for you there, right? Because there's nothing in California right now that we've seen. So you're leaving the state no matter what. That's a preference as well. And so that's where it starts. It's just like what people, I like the mountain, I like the beach, like that's what they're telling us, right? And so we're trying to take our handful of markets and go, these ones will probably make more sense for you, right? And then we'll talk to them about them. We'll be like, here's this market. This is what it looks like. This is what you could expect. This is the details about this market. What are your thoughts? And then we learn more of their preferences.
Yeah.
We try our best to tell people to just be like, stop having so many preferences. Just put your money where it's going to give you the best return, right? And just that to me makes the most logical sense. It's an investment.
But that's interesting though, because for me, I want to stay in them. That's how I grew up doing them. But when I had Taylor on, he said he started like that. And then he was like, no, yield. All I care about is yield, because I'm running a business, and that makes more sense. So it really does matter for the person coming in. Hey, look, if you want to use it, then it's a different story. But if you're really trying to turn this into a business, just trust us to locate the one that's going to do the best for you, right?
Yeah. That's there's a whole other scenario I always think about with that too, because I do get that a lot where people are like, oh, I want to buy a home in this vacation market that we like to go to once a year. Then like, if when I buy the home there, then I don't have to pay the, $2,500 that we pay to stay at the Airbnb every year, and it'll be awesome and it'll make us money. And I go, okay. And I'll analyze the property for them. I go, okay, this property will break even. And they're like, that's okay. And I go, you'll save $2,500 though. So you're up $2,500. They go, oh, okay. Yeah. And I go, however, to get it, it's going to cost you $200,000 to get it up and running. And they're like, that's fine. It breaks even. I save $2,500. I go, okay. So you're about 1 to 2% return on this, cash on cash, right?
Yeah.
However, what if, and I just throw them a scenario. I'm like, what if you took this $200,000 and you put it in a property, and that property made you $3,000 a month? Because that's possible. I do it all day for our clients, right? $3,000 a month. And then you're going to have $36,000 of profit at the end of the year. And then you can take $2,500 of it and you can put it towards your vacation. And then you can use the remaining for whatever you want.
And go vacation right next to it. Get the short-term rental right next door. Yeah.
And then the kicker to it is always, and then when you go on vacation, you don't have to repair the home. Yeah. You don't have to care about the home. You don't have to do anything about it. It's not yours. You just use it, leave. Your husband's not in there, tightening all the doorknobs and tightening all the chairs.
Right.
You guys are just on vacation. in the place that you
We're
actually
saying like,
enjoy being
hey,
on
don't go in the guest room. Well, it's our guest room. No. You know, we don't want to rewash those sheets.
Right.
Yeah, these are really good points because it helps me thinking about it too, because you have to, this is why it's so important to understand the person. And even if you go back to the beginning of our conversation when we were talking about the fictional, you know, mortgage company, and where you said like, oh, I would say no to 90%. I bet there's a fair amount of people that you say no to as a client because, you know, it's like for me as a realtor, when somebody comes to me as an investor friendly realtor and they're like, hey, well, I say, well, where do you want to be? What towns are you interested in? And they say, well, just find me something that does well. I'm like, that's not my job. I can't, you know, magic ball you. You have to be a part of the scenario. So if someone comes to you and they're just like, I don't care where it is, I don't care what it does, just get me. Is that an interesting client for you?
Yeah, love those guys. Love those people. Are you kidding me?
Because your data, but you know your data is on. You know what I mean?
Yeah. What you're worried about is having to study all of the markets. I've already done the work, right? I've studied them. I know where to go, where not to go. We keep up on all of our markets. We keep looking for new markets. You come to me and you're like, I don't care where I go. Okay, cool. You got $300,000. Here's 3 different markets, 3
best
different property
options.
types. Which one do you like the most? You like that one? Okay, let's find the best one in there. And
so go ahead. But of the 350 markets that you've researched, you've pinned it down to 15 that you actively work in. Was that what I heard before?
It's kind of a rough number. So it sounds weird to say it fluctuates, but we have like some core markets. We have one market, which is one of my absolute favorite markets, but there's only about 3 properties that show up every year. And so, but when that property does show up, we're like, get it in somewhere. Somebody got to buy it, right?
Yeah.
So that one is one of our markets. It's just like, it's a smaller market. And then there's some markets that will shut off. And then there's other markets that we're opening up. So we're kind of like constantly working through these markets. So I don't have a perfect number. I always say around 12 to 15.
Yeah.
But we are trying to open that up to, so I think we can actually open that up to like 30, because one thing that we've been doing a lot of is trying to find, one thing I avoided at one point were like these small one-off markets where you would only get 1 or 2, right? Like I just said, one of my favorite markets is one of those markets. But when you're trying to work with TechVestor, right? They needed everything consolidated in one area, similar to what we were talking about with the Getaway.
Yeah.
But now we're reworking all these different markets, and we're like, well, that market over there where we can only get 3 would be absolutely killer for 3 of our clients, right?
Right.
And it's like, that's 3 more homes. And so if we can find 15 more of those markets, which we already have like a list that is kind of like a hot list. We just need to vet them all. Yeah. Then it opens up a ton of places. And I like those places because I feel really good about them. I think that they're right for the right customer and all those different sort of ways of thinking about it. But yeah.
Yeah. For people who are, maybe they've dabbled in real estate investing, but they've never done short-term rentals, what would be like your first piece of advice for them to get ready for it or to understand about short-term rentals? I know we talked a lot about it, but I'm sure there's a lot of people who are interested because it does look like it really is a good business if you know what you're doing. But I think it's harder than people think. So what would be one piece of advice you'd give someone who hasn't done it but wants to do it?
I've got a piece of advice, but I want to ask you first why you think it's harder. Like, what part would you consider to be harder?
Hospitality, I think. And I mean, I do think that you can, I think that they looking at, like what we were saying before, that's very Instagram or TikTok friendly. Like, hey, like you can just, this is a plug and play. But if you're not good at hospitality, you're not going to do well. The property may be good enough for you to do okay, but you can do exceptional if you get very good at hospitality, I think. But I'd love to take your opinion on that as well.
No, I mean, if you have an act for hospitality, you're definitely going to have an advantage. That's a given. Yeah. Right? I mean, you're going into hospitality. If you're good at hospitality, you're going to have an advantage. One thing I'll say is I don't have an act for hospitality, right? Like I'm not the hospitality guy, right? Like I'm just not. I'm the data guy, and I still made it work. But it was through systems and through people and through like having to make it work, right? So this is the same advice I give all the time because to me, it makes a lot of logical sense. Please poke holes if you find holes. But if somebody is going to get started, okay, one thing that you can screw up and fix very easily is somebody's experience. So say somebody goes to stay with you and you send them not great messages. Maybe you sent them a little bit too late and that pissed them off and they let you know, or maybe you forgot to clean the home, or maybe, you forgot to clean somewhere, or maybe you forgot to put, bags in all of the garbages because whatever. Like those things, in my opinion, are super easy to fix for the next person that walks through the door.
Yeah. Right.
And so now you may be bad at hospitality, or maybe you don't have an act for it, but you can logically understand, I should probably do those things. And then the next person's going to have a better experience. And then at minimum, you're good, but you're not great. Right. So it's easy to fix because you can keep working on it turn by turn. Right. And the cost of doing that is a bad review, which does suck, but it's not the end of the world. Okay.
And definitely better to knock that out in the beginning. Not great for the algorithm, but also I found when we were new at it so long ago, when we knew they were going to give a bad review, we would just comp the stay. We're like, like I'll do anything, just do, like I'll comp the whole stay, just don't write the review. That was our fault. We're really sorry. We're going to comp you. Done. And then you get the right review. So I guess when I think about if somebody were to be new, what is your worst case scenario for what you're trying to do? And being a bad host, your worst case scenario is you recomp the person and you get a 5-star review. Yeah. Or you don't do that and you get a 1-star review. It's literally not the end of the world. It happens all the time. And you keep hosting and you keep making money because you can figure it out. That's that worst case scenario in that scenario. However, the worst case scenario, if you buy the wrong home, is that you're going to spend an entire year losing money, not making money, and working to tell yourself, I think I can do better next year, and I'll put more money into this property to make it even better. And I need 2 more pinball machines. Yeah.
Yes. And then you're going to work an entire other year for free. So you've now worked 2 years for free and you've lost money for 2 years, right? Now you have to sell the property because it's just a money pit. Yeah. And maybe you have to sell it in a down market. Maybe it's an up market. That's great. But what if it's a down market, right? And what if you've got to get it off your hands because you can no longer support this property through your income and it doesn't make any sense. Now, in that scenario, which happens way too often, is you've worked for free for 2 years. You have sunk a crazy amount of money into the furniture, which is worth almost nothing, right? And then the property as well, like you've done a lot to it. So you're out a ton of money. You're out a ton of time. You've made $0. Maybe the property has gone up a bit, but now you have to sell it, and maybe you have to sell it quickly because you just can't keep affording it. And now you're going to sell a loss. And you could have amenitized it for short term, and so the long term buyers are completely uninterested, and you don't have the data to back up your sale to short term buyers. You're screwed. You're screwed. You didn't need that the 2 saunas and a hot tub and a pickleball court. Those are good points, and that's how you could handcuff yourself. So you tell me, of these 2 scenarios, is it more important to learn how to be a great hospitality host or to learn how to understand the data to make a good decision? Yeah. Right? It's a great point because I'm really thinking of it as you're saying it. And now I'm thinking hospitality is the whipped cream on top of the sundae where you take good to great. But like you said, if you just pick and you didn't get any help, who, not how principle, I can just do it myself. You can't, if you don't know the data. And going all the way back to the beginning, you can look at the data, but if you're not in touch with someone who understands how to interpret the data and understand the market versus what else is out there, as we were saying, you could be that person who thinks, oh, well, there's 5 earning, 200. I'll just go in there. But you suck as an operator. So you're like, well, I don't want to do all the stuff that they have. So I'll make, 150. And then you make 60. You're not even as good as the 80 that we were talking about. So the reason I stress this, obviously people are probably listening like, oh, he's biased. Oh, he's, trying to talk about his services. But the reality is that I talk to people about their failing Airbnbs probably more than anybody else. I had an email in my inbox this week, from a guy who has a property that is only making, it was like 60 to 80, somewhere in that range. I can't remember exactly the number, but he said that, it was around like 67. And he said that he wanted to figure out how he can get it to 120. He goes, can you help me to figure out how to get to 120? I look at the property. It has everything. It's got the game room. It's got the views. It's got the good photos. It's got a good layout. It's got a good design. I'm like, what makes you think that you can get to 120? I'm like, you have all the things. And I was kind of blunt about it because I was confused. And he goes, well, I've got 40% occupancy. If I can get to 80, we'll be good to go. So then I go and look on AirDNA to be able to see that area. And I'm like, well, that's a good point. He's got low occupancy. Is there a way to get it up? But the reality is that every single home in his area, for his size, the most that they were doing was like 110. And then if you were to look, there was some specialty like 5 bedrooms because he had a 3 bedrooms. He had a 4 bedrooms specifically.
Yeah.
But there were some like nicer properties that were 5 bedrooms and 3 bedrooms that were doing slightly better. However, they were all log cabins. And so I essentially had to explain to him, like, I understand what you're trying to say, but there's not enough demand in your market for you to go from 40% occupancy to 80% occupancy and get all the way up to 120 with the product that you have. You bought the wrong property. It's not going to get there. And I feel terrible. Like, even I feel bad if he's listening to this right now, but that is the reality of his situation. And I think he told me, he's like, well, we're going to try and do some additional things and we'll go from there, which is he's the year 2 guy who's now trying to improve it to do better next year.
And it's hard because he has a good property and he did everything the right way. So that's a pro. But like you said, that's the area is looking for something a little bit different. He's got the amenities, but maybe not the same vibe as the log cabins or something for what they want.
I would say you said he's got a good property. I would say that he put a property together well for Airbnb,
right?
But he has a bad property.
Right.
He bought the wrong product at the wrong price in the wrong market. And this is his situation, right?
Yeah.
Half of the revenue that he wants.
Yeah, this has been super helpful. I mean, these are things that, I talk to so many people about short-term rentals, but I feel like you have really a unique view because you dig the data, but also are able to kind of relay it in a way that, look, this makes sense. And then, you've already changed my idea on a couple things what's the best way to do it is to make sure that you work with experts who can understand the data and then get help with the management if you don't know what you're doing. And if you pick right, you'll be successful. You may not be the 200, but if you're cash flowing and you're at the 80, like you're cash flowing. Now you can figure out how to cash flow better if you can, like you said.
Right.
If you start the right way, though, you have a better chance of being able to be that person who comes to you and say, how can I take the 67 to 90? And when you look, you're like, oh, your photos suck. Your description sucks. But the property looks like it's really good. You're just not doing it the right way. Now I can operationalize you, and I think you can go to 85.
Yep. That's the easy one to fix, right? However, 1031 exchanging out of a home that has lost you money for 2 years, that's a tough scenario I don't want anyone to be in, right? That's the goal of my company is to try to help people avoid that, right? And I have 6 free courses teaching people how to understand Airbnb data. So if you don't have the money to hire, that's fine. Just at least study the process. I mean, how many more homes do I need to buy that are cash flow positive before people understand the process works, right? Like that's to me crazy.
How many people figured out how to be a good manager and then we're like, wait, people need good managers. Now I can co-host and manage because I'm really good at this. It's a very viable business opportunity that you can do from home. The good co-hosts are crushing it. They know what they're doing.
The reality is that almost nobody does just one thing. Most of the people who get into this, if they're buying or managing, they will do one or the other. So they'll buy their first one, get really good, and then they'll manage 3 more, right? And then they'll buy another one. Or somebody who's managing 10 will go out and buy one, right? And it's like, you're going to build it up that way. And maybe you come across a deal, it's an unbelievable arbitrage deal, and you're like, I'm jumping on that. And then you now have arbitrage management and you own, right? So it's usually how it goes.
Yeah. Awesome, man. Is the best place for people to do all of the stuff that we've been telling them to do at strsearch.com?
Yes.
So, well, what do they get though when they come in? So say somebody's interested, they want to work with you guys. What do they get when they come in? They're obviously going to set a meeting, say they do this, they watch 6 videos, they're hyped up about it. What kind of do they go into when they get into that?
So 2 different things here. I want to make sure they're sort of clearly defined. The first thing is we have a free training, right? Now, as of today, it's broken up into 6 different courses, with one of those courses being 40 hours long. Turns out that's way too long for anyone to go through. So what I'm doing by the time this podcast comes out, we'll have it broken down into 7 days. So it'll be a 7-day course.
Yeah.
Each one's going to be somewhere between an hour to 2 hours, but it'll teach you everything you need to know, right? And it'll be all the core concepts that you can then go apply to your own teachings, right? So that's I built that course to stop people from buying bad properties. That was the main objective, right?
Yeah.
At the same time, build trust with everybody. Saying, and keep in mind, I built that course after finding 120 properties. So that just lives out there as my sort of like, here you go, everybody, right?
Yeah, savior. I mean, that's why I have the podcast. Everyone asks, like, why do you have this podcast? I'm like, I don't want investors to step in the holes, even experienced ones, that all these great guests who can tell them what not to do can help them not do it.
That's so, and I know what I know best, and so I just teach what I know best. I don't teach hospitality, right?
Yeah.
Not the hospitality guy. So anyways, that exists there. Now, that's free. You don't even have to give an email. You can literally just go to the website and watch it, and it's a free course right on the site. However, if you can't figure it out yourself, or you don't have the time to figure it out yourself, you have the option to hire us. And if you hire us, what that looks like is you get onboarded into our system, and we figure out, based off of your budget and your preferences, which properties we should match you up with across the United States. And then we'll continue to work with you until you find the best possible property for your situation. And then we're going to connect you with every single last person that you need to be connected with, because we've worked with every provider to find like the best of the best. We have the best realtors in the market, the best lenders with the best rates, the best construction, the best design. Like we have all of that brought together so that you have the entire system figured out. And then when you go to launch it, send it to me so I can tell you everything you did wrong so that you can fix it. And then it can be the A-class property that you want. So now you have a golden property and it's put together the right way. And now you just have to manage it well, or hire somebody to manage it well.
Yeah.
So that's what that looks like.
Awesome, man. I really appreciate it. I was trying to get you on for a while. I'm really excited that we did. This is a great episode. And I really think it sums up that short-term rental is, like I was saying, it's more than people think, but also it's not. As you countered, like anybody can do this if you're using the right amount of money and you're coming into it with a little bit of knowledge and you're willing to put it in and understand the market. I really like it. So I'm glad that we got you on. Really appreciate the time.
I appreciate you having me on. This is very enjoyable. So if you ever want to have me back, please.
Oh, I will. Yeah. Because I feel like we were like at 1 hour of what we could do 4 hours, because there's so many more, which I really like. So I definitely will set that up. And the best place on Instagram where they can find you by that tag is at the Airbnb Data Guy, right?
Yep. And YouTube. I've got so much free.
Yeah, the YouTube is awesome. I go on there, and I think it's interesting because we both said, and I said, this is why I started the podcast, but it really is the way to build credibility in any type of space for people who are busy on TikTok looking at people that are selling them a course. A lot of people do sell stuff, but if they're giving away a ton of rock solid information for free, that's the way you can build trust and know them before. So then when you go to hire them for something, like I already know what I'm getting. Rock solid. And I think that's really important and of note. So if they go to your YouTube, they're going to find a ton of info as well.
Yep. I literally give away everything other than the results. So it's if you follow the process, you'll get to the secrets, right? But if you don't want to follow the process, and just hire me and I'll give you the secrets, right? Yeah. So pretty simple.
Awesome, man. Well, I'm definitely going to have you back. Glad to get you on, and I look forward to staying in touch with you.
See you later.
Yep. That was John Bianchi, the Airbnb Data Guy. I'm Jonathan Green. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on the next episode of Zen and the Art of Real Estate Investing. And it's Eric Oliver, formerly of Cost Segregation Authority. Now they're called CSA Partners. So yes, it's a cost segregation show, and we go over why it's so important, what properties you can do it for, and why it can help you so much with your taxes. We'll see you next episode with Eric.